facing criticism from the government over Reserve Bank of India's focus on controlling inflation rather than prioritizing growth. The newly appointed RBI Governor Sanjay Malhotra addressed these concerns on Monday. In his foreword to the Financial Stability Report, Malhotra expressed optimism about India's economy, forecasting an improvement in 2025 driven by high consumer and business confidence. He emphasized that the RBI's focus will remain on maintaining financial stability. The Indian economy is expected to accelerate in the second half of the current financial year. Malhotra also highlighted a positive investment outlook with corporates entering 2025 in a strong financial position. Joining us on the show is Amrish Baliga. Amrish, good to have you on the show. Good morning. Are you concerned about RBI's inability to cut rates, because that is what government pointed to a short while ago, and its impact on borrowing and consumption? And what's your outlook for 2025, this being the last trading day, the last day of the year?
No, in fact, that's clearly one of the concerning things. But then again, RBI also cannot cut rates just like that when inflation is still decently high. Unless the inflation starts coming down, especially the food inflation, I don't think like RBI can go ahead and cut rates. But I'm hopeful that in the February policy, they may cut rates, possibly 25 basis points. I would be surprised if it's 50, but 25 is what I'm expecting. But then overall, if you're looking at the markets, if you look at the macro numbers, most of them have been concerning. And then as far as the earnings are concerned, Q1, when we saw a downtick, we thought it was a blip. Q2 was quite disappointing, and that's the reason we started seeing the correction in the markets like sometime in October. And now Q3 earnings should start in the next 10 to 12 days. And again, I don't expect that to be any better than what we saw in Q2. In fact, it will be worse than Q2. So because of which, I think people are concerned, and because of which we are seeing this correction. And as far as the macro numbers, I talked about, look at the GDP, that's been revised downwards. Industrial production is down. GST growth has been flattening out. And like what I said earlier, inflation, I think that's still a big issue. Rupee has depreciated quite a lot, especially in the last 50-20 days. If you compare to the last year and a half, it's been, very stable. But then in the last 15-20 days, we've seen a decent amount of depreciation in rupee. And that's also quite concerning. So overall, because of this, I think the mood on the street, in the year end, as far as, and also possibly in the new year, maybe the next month or two, could be quite cautious to bearish.
You know, Amrish, I have to ask at this point in time, because it's like an elephant in the room. Everybody talks about it, whether RBI should now look at perhaps reconsidering how it calculates inflation, and whether, inflation in consumer items like food, vegetable, pulses should still be a part of inflation calculations, the CPI calculations, because as the government points out, RBI's inability to really, rejig and be able to provide some sort of relief to consumers has resulted in a degrowth and perhaps not enough spending, both discretionary and otherwise, on parts of, corporations as well as individuals.
Yes, possibly, because really RBI cannot control a decent amount of this inflation, especially the food inflation. It's not possible for RBI to control. That has to be controlled through government measures. So I think it's time that it was sort of de-linked, and RBI can go ahead with the rate cut despite high inflation on food. So I think that will actually trigger economic activity. So I think that change should be made, and let's see.
By when is your expectation for a rate cut in the coming financial year?
The total rate cut in the coming financial year, which is FY26, if we talk about, I'm expecting at least 1%, which is like 100 basis points in FY26, and like I said, 25 to 50 basis points in the balance of FY25. So I think that could come in the February, the meet.
All right, so February meet there. There's an expectation of a rate cut. We'll of course have to see whether the new RBI governor will bring in some sort of bonanza for people. But stay on, Amrish. Another important story which is coming to light is by the way of the financial stability report that was released on 30th of December, highlighting the strength of the Indian financial system despite global vulnerabilities. The report is based on the evaluation of the subcommittee of the Financial Stability and Development Council. It provides an in-depth analysis of the global and domestic economic conditions and the performance of scheduled commercial banks, non-banking financial companies and the solvency of the insurance sector. The report emphasizes that Indian economy and domestic financial systems remain robust, underpinning a strong macroeconomic fundamental and healthy balance sheet. Now, Amrish, what's your outlook for the banking sector? Now, if you look at the trends that have emerged, balance sheets are looking healthy, margins are looking well, NPAs are under check. What sort of growth are you looking at as far as banking and financial sector is concerned?
No, I mean, if you look at the balance sheet clearly looks much better. I think it's the best sort of balance sheets we have seen possibly in decades as far as the banking space is concerned, especially the PSU banks. But I think, when you're looking to invest in the banking space, I think the other thing you should look at is the credit growth. And credit growth is not really happening as far as the expectations of the analysts are concerned. It's not happening at that pace because we have seen some sort of a slowdown. So unless, of course, we see this rate cut, I don't see credit growth, really taking off. So that's something to be watched out for.
All right, credit growth is something to be watched out for. But what's your overall outlook as far as banking pack is concerned, banking and financial pack is concerned for 2025?
I really don't see a major growth as far as the banking pack is concerned, but I'm more concerned as far as the NBFCs and the microfinance companies are concerned. I think that's where there could be a bit of pain because we have seen a huge increase in personal loans. And that's where I think the pain would be, possibly in FY26.
All right. In fact, you're right. Another report that has come in, and this one's important. The Reserve Bank of India has noted a major moderation in loan growth for shadow banks in the first half of financial year 25, with growth dropping to 6.5% on a half-yearly basis by September of 2024. This slowdown follows RBI decision to increase risk weights on non-banking financial companies lending to certain consumer credit categories as well as bank lending to NBFCs. The impact was particularly evident in the upper layer of NBFC segments, while primarily including NBFC investment credit companies with a high share of retail lending. However, middle-layered NBFCs, excluding government-owned ones, continue to show strong loan growth, especially in their retail loan portfolio. Remember, on a year-on-year basis, credit growth in the NBFC sector slowed down to 16% from 22%. 0.1%. Amrish, that is a significant slowdown as far as NBFC sector is concerned.
Absolutely. But then at the same time, if you look at just the personal loans and the gold loans, the way they have gone up in the last 18 to 24 months, I believe there could be a lot of pain in that space because I'll just take you back a bit on the F&O segment of the market where SEBI was quite concerned as to the way the retail investors are losing money. And the total amount of money which was lost in F&O by the retail, I think, if I'm not wrong, the figure is closer to about 1.4 lakh crores to 1.5 lakh crores. Where has this money come from? Basically, it has come from the investors' savings as well as the sort of personal loans and gold loans they have taken to fund their market activity. So finally, I think there'll be pain in this space.
All right, anticipating pain as far as NBFCs is concerned, but shifting focus now to perhaps what could bring cheers, and that is the budget of 2025. Representatives from various industry bodies met with Finance Minister Nirmala Sitharaman on Monday for the usual pre-budget consultation, where they made several key requests ahead of the union budget for 25-26, which is scheduled to be presented on 1st of February. Among the proposals was a call for reduction in personal income tax rates to boost disposable income for the middle class, a cut in excise duty on fuel, measures to support employment-intensive sectors. The industry groups also raised concerns over the global dumping of excess stocks by China, including in India, as well as challenges posed to food security, inflation due to the ongoing climate emergency. Those were some of the key areas that were discussed by the Finance Minister. Amrish, what is your expectation? If I were to ask you to jot down and share with us some of the key expectations that you have for the budget, looks like it, India Inc. right now is really hoping that there will be measures to boost disposable income, to boost employment, and perhaps also, the entire debate about bringing fuel under GST, cutting excise duty, those were some of the key areas of discussion.
Absolutely. I think the first and most important thing for the finance minister to do would be possibly to provide that impetus to the industry. I mean, that can possibly happen through some sort of tax cuts. And especially, I mean, as far as the individual, taxpayers are concerned, I mean, they need to have more cash in hand. I mean, we are talking of inflation in single digits at about 5.5%, 6%, 6.5%. But then a person on the street clearly knows that it is not 6 or 6.5%. It is in like double digits when it comes to your home budget, because most of what you buy, the inflation figures are much, much higher. So it's actually hurting them. So they need more cash in hand, and that can be done possibly through some sort of tax cuts. So that's clearly one thing what I would expect. And as far as the industry is concerned, yes, I think there has to be something done to protect the domestic industry. And just like the way President Trump actually is talking about the tariffs, I think there has to be some sort of tariffs to support the domestic industry.
Okay. And, apart from that, there is, of course, the big expectation that perhaps there will be some sort of excise duty cut on fuel as well. Well, that is something that government does time and again, time to time, as and when required. But conversations around bringing fuel under GST, those are long pending demands now.
Yeah, but I doubt whether, government would do that because, excise on fuel, I think is one of the major sort of income for the government. And at this point of time, I don't think they would really do away with that. I think that can be postponed possibly for a year or more. And the other thing I think what we should look for is the sort of spend on infra. Because despite a decent budget last year, as far as the infra is concerned, we have seen that most of the spend has not happened. So we need to see this year whether the same thing would be added to the next year's budget. So we could see a really inflated sort of infra budget. And I think that's quite important and necessary, for the economy to in fact take off from here.
All right. Given that it was also an election year, perhaps those are some of the reasons that the government bodies are also citing on why there wasn't enough infra spending. Perhaps it will do better next year. I think the industry groups are also concerned right now, Amrish, and I think it's a valid concern given that there's been an excess dumping in India, in the US, and Donald Trump is taking it up big time by, China particularly. That continues to be a challenge. What can the government do to really help on that matter?
Exactly. I mean, I just spoke about that there has to be tariffs against such dumping, and especially from China. So I think, the finance minister
any
should.
particular sector, Amrish, where you think tariffs are needed and needed now?
I think it is across, except for where those materials or those commodities are used as raw materials for the Indian industry. I think for most of the finished goods, there should be some sort of anti-dumping sort of a policy as far as China is concerned.
All right, anti-dumping policies there, perhaps time to implement some of them. But shifting focus to another story which is coming to light by the way of India's current account deficit, which has shown a slight moderation in July to September of 2024 quarter, easing to 1.2% from 1.3% of the GDP during the same period in the previous fiscal year. For the first half of the fiscal year, the current account deficit stood at $21.4 billion compared to $20.2 billion in the same period of the previous year. This according to the data released by Reserve Bank of India. Remember, the current account deficit measures the difference between countries' exports and imports of goods and services, serving as a key indicator of its external sectors' health. So it does look like India is making strides there as far as the current account deficit is concerned. Amrish, I want to get you back into the conversation. A lot of this current account deficit or trade deficit coming in favor of India has also been due to a lot of external factors that India cannot control. There's been disruption of supply chains. There are two active wars in globally right now, come to think of it. Is this an indicator that the fact that India is perhaps exporting more than what it is importing right now, a sign of self-reliance going forward? Are you happy with the numbers that are coming in? What are you making of it?
No, to a certain extent, we can say it is a self-reliance because of which the imports are lower. I think the other reason also could be the sort of a slowdown which we are seeing. I mean, we are still seeing growth, but there's a slowdown of growth happening in India. So that could be the other reason. So, I mean, that's not something that one should be happy about. But yes, self-reliance is something we should be looking at going ahead. I think that there should be increase in self-reliance, no doubt.
And before I let you go, as you mentioned, there is some sort of slowdown that we are also seeing. I think it's going to be a conversation as we move into 2025 as well. Consumption story, unlike how we started 2024, where we were very upbeat on how India is consuming, I think that tapered down and to a large extent towards the end of 2024. How concerned are you, and what is your expectation and hope for 2025? And this, of course, before I let you go.
No, I'm clearly concerned about that, because of which we have seen a major slowdown as far as the white goods space is concerned, FMCG is concerned. But again, we are hopeful that, first of all, the rural demand should pick up in calendar year 2025. And hopefully, in the second half, we should see the urban demand also getting back on track.
All right, urban demand should pick up. That, of course, is the hope. Amrish Palega, wish you a very happy New Year. Thank you very much for joining us today.
Thank you, and wishing all of you a very happy New Year and all your viewers too.